The cryptocurrency landscape is currently showcasing a mixture of institutional moves, technical signals, and strategic shifts that could shape the next major market cycle. Notably, large players like BitMine are making significant acquisitions, such as purchasing over $1.5 billion worth of Ethereum, ETH, since the recent market downturn, signaling long-term confidence despite prevailing volatility. Meanwhile, institutional interest persists, exemplified by Ripple's intentions to raise $1 billion to bolster its XRP treasury, reflecting ongoing efforts to strengthen liquidity and strategic positioning. Amidst these developments, technical analysis highlights a cautious yet optimistic outlook. Renowned analyst John Bollinger suggests that Ethereum and Solana, SOL, may be forming bullish reversal patterns, specifically W bottoms, indicating a potential shift in trend if key support levels hold. Similarly, market indicators such as Bollinger Bands signal upcoming bullish reversals in ETH and SOL charts, hinting that a recovery phase might be imminent. Crucial support zones are holding for major assets. Ethereum is maintaining above $3,800, with predictions pointing towards possible moves to $4,700 if current demand sustains. Bitcoin, BTC, after suffering a brief dip below $105,000, is showing signs of accumulation, with on-chain data indicating that buyers are quietly rebuilding positions, hinting at a potential rebound and a possible surge towards $150,000 in the longer term. However, recent large outflows from U.S. spot Bitcoin ETFs, totaling over $536 million in a single day, reflect waning short-term investor confidence, raising concerns about further downside in the near future. On the regulatory front, Japan's Financial Services Agency is considering allowing banks to hold cryptocurrencies such as Bitcoin for investment purposes, signaling increasing mainstream acceptance. Conversely, China's regulatory landscape remains restrictive, with giants like Ant Group and JD.com halting stablecoin projects following government interventions, emphasizing the ongoing global divergence in crypto policies. In the NFT and Web3 sectors, sales and participation continue to rise, with NFT transactions increasing nearly 2.5%, and platforms like OpenSea preparing to launch new tokens with substantial community-driven buyback programs. Similarly, DeFi protocols and Layer 1 blockchains like Tempo, backed by Stripe and Paradigm, are securing hundreds of millions in funding, indicating continued investment flow into infrastructure. Overall, the market is at a critical juncture. Institutional accumulation and technical signs of recovery suggest bullish sentiment ahead, yet macroeconomic uncertainties, regulatory challenges, and short-term market stresses caution investors. With large assets being strategically positioned and technical patterns hinting at possible trend reversals, the next weeks could prove decisive in whether crypto embarks on a sustained rally.